Hi, Chris Picciurro, teaching tax flow. One of the very popular provisions that has been talked about a lot in the tax planning, strategy, and preparation circles is the rule under OB3. Remember, that's one big, beautiful bill act got signed by the president July 4th, 2025, and that is the no tax on tips. Now, this is a rule that's going to benefit a lot of people that are in a customarily tip compensated industry. And we're going to talk about that in one sec, what that means. Let's talk about the deduction first. This deduction is very interesting because it's effective immediately in 2025 and goes through 2028. And not only can employees take a deduction for tips, but self-employed individuals, as you can see on the screen you're looking at right now, can take that deduction for qualified tips. Now, it's going to depend on your occupation. We're going to talk about that in one second. What that means, though, is that those tips reported on W-2s and 1099s might qualify. So qualifying tips are voluntary cash or charge tips received from customers through tip sharing. Now, I want to give you an example of something that might get really murky. Let's say you go to a restaurant and you have a large party. A lot of times restaurants charge a 18% tip for parties that are 8 and over, 6 or over. And in that case, I don't think that's going to be a qualified tip because that was automatically put on the bill. There are some situations where there's a tip automatically included on a bill when you go to a restaurant, a bar, just a variety of places. So that's not a voluntary tip. And in tax preparation circles, that type of tip's not going to qualify for that deduction. Now, the maximum deduction is pretty generous. It's $25,000 for self-employed folks. Although, and this makes sense, the deduction can't exceed your self-employed income. So let's say you are an Uber driver or a taxi driver, or you're self-employed doing delivering meals. Your tip income can't exceed your net. That deduction can't exceed your net income from the business. Now, eligibility under the Section 199A or the Tax Cuts and Jobs Act, certain industries were identified as SSTBs. That's a specialized service trade or business. So examples, well, people are medical professionals, attorneys, tax preparers, accountants. So that deduction or that taxpayer can't be an SSTB. And employees whose employers are in the SSTB are not eligible either. So the person receiving the tips cannot work for an SSTB. So for instance, let's say you work at a law firm and you happen to be delivering things and you get a tip. Well, you work for a specialized service trader business, and that tip's not, even if it was voluntary, not going to be eligible for that no tax treatment. Obviously, you're going to have to furnish your social security number on your return, and if you're married, you have to file jointly. So let's talk about reporting for a second. Employers, as you can see on the screen, must file information returns with the IRS and furnish statements. So that's going to be a big shift, right? Because W-2s and 1099s now have to be changed to reflect these tips. And we have to figure out if those tips are voluntary or not. But here's the good news. By the very beginning of October, or October 2nd, the IRS is going to publish a list of occupations that the IRS deems to be customary and regularly tipped. So that gray area will get reduced to determine, are you in an occupation that tips are customary or are you not? And we're going to, once that list comes out, we're going to definitely create more content in teaching tax flow. Make sure you stay connected with our YouTube channel as more information comes available on this no tax on tips deduction.